What a rough week in the markets. My name's D7 here at Grok Trade. It's Thursday, January 7th, 2016. And the markets have been rocked with the Dow down 392 points. Now, before I get into some technicals, let me share with you some good news for the economy. U.S. economy will probably grow around 2.5% this year. It's not great, but employers are also creating, on average, 220,000 new jobs per month, and that's been happening for the past year. And layoffs are fairly low and at relatively low levels. Vehicle sales have been on fire. They've been breaking records here in 2015. And for American homeowners, we're recovering some of our equity loss during the housing bust. Now let me flip the script here, give you some not so favorable data specifics. And we have the U.S. markets certainly not expected to grow by much. To be quite frank, neither is Europe. And Europe is doing poorer than what we are here in the U.S. Not to mention China. China traded for all of 30 minutes last night before the circuit breaker goes off, and they killed the markets over there. They are on a slippery slope in the U.S., and the investors here are paying special attention. Furthermore, we have rising interest rates, and that's going to happen we're speculating it's going to happen around 4 times in 2016. And probably one of the most damning pieces of information that's out there that very few people are talking about is the U.S. debt now is ticking above $18.8 trillion. Gang, most economists tell us that if we hit 22 trillion, the economy, government, and the feds are strong enough to handle the repercussions of such a level. And we're getting there and quickly. All right, but let's talk about what we can expect going into the future. Bottom line is this. I gave you a bunch of ideas and thoughts on the good side, positive side, and on the bearish or the con side. However, I learned in my 18 years of trading that I had to put my opinions, put what I think's going to happen, and put news on the back shelf, because it seems like I was always on the wrong side of the fence on my guessing. So what I learned was technical analysis. The charts will tell you what's in favor and what's not. So what we want to do is look for things in uptrends, not in downtrends. That's why we look at the S&P 500. So speaking of this, the spider down 2.4%. The diamond's down 2.36%. NASDAQ down more than 3%. Russell's down 2.7%. Banks off 2.5%. Financials off nearly 3%. U.S. dollar break even. Crude oil down 2%. Silver up nearly 2%. Gold higher by 1.4%. And the VIX spiking higher by nearly 11%. And here we are again looking at the S&P 500 ETF called the Spider SPY, giving us a snapshot of what's taking place in 500 blue chip companies here. And let me say this. I am on record, on timestamp record, in 2007 calling for the market crash. And if you guys remember, I called a market top back in August. So when we started selling off here, I said, warning, 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 market top. With this high, or let's see, this high being the market high and top, saying we will not see that any time soon going into the future. Sure enough, this line coming across, we never got to that level, and we are now in 2016 and only heading down. I am going to be doing a huge weekend video coming up. Everybody's going to need to watch this weekend video. It's going to give you some incredibly important information. But today, do you remember we said the problem with this drop was that we closed below a support line? Remember us talking about that? Sure enough, boom, to the downside. We rallied higher. Why does it rally higher? Because you have people in the day trading rooms, such as our Grok day trading room, that when we gap down, what you do is you buy the fade. You fade the gap, you buy it, and it heads higher, 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 higher. Once the gap fills, then you sell it, and then you bring it right back down, 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 down. So this dude is dropping. I'll tell you, we've been dropping 7 periods in a row with just one little bump. We did get a bump at a support level, pop right there, but this has been an incredibly bearish week, and we're in a lot of trouble here. Now, this is very crucial that we look at. We have a line coming across. This line is actually brought in with the weekly chart. If I go to the weekly chart, we're dropping, dropping, dropping. Now, this is crucial. I need you guys to follow me here. Big, big, big important thing. The weekly chart on the S&P 500 going higher, but you can see the trend line sloping, sloping, sloping. This is a rolling over, and then we drop. Then we get this little double bottom right here, and then we pop. However, the pop stalled out at a lower trajectory, giving us a trend line that now is sloping downward. These were sloping upward. This one's now sloping downward. That's a big time problem here. And then we start to drop, drop, drop. We are now this week decisively below a major trend line. This trend line, gang, is a biggie. This thing's been challenged to 1, 2, and this goes back 2011. 1, 2, 3, 4, 5, 6, boom! We cracked it. I'm telling you this, we need to have a 100, 200 point up day Friday for this to get healed. If not, we are in significant trouble in the markets. Again, it's not about our opinions of what's happening in the economy. It is what's happening with the confidence or the lack of in the investment world. And that is what makes the markets go up and what makes them go down. We are trading mentors, and we're here to take you by the hand and to be your mentor. If you like it, like it.